September 19th, 2025, Microsoft 1 minute chart. Here's the topics I'll cover: 5 waves daily, entry, exit, and stops, 4 candle connections, which is poor structure, gaps, poor structure, and 5 waves don't have to be the largest move. So here's market open, and we get some consolidation of price, and then price bottoms out, starts going up. So this is going to be the beginning of wave one. How do we know that price is no longer going down on these 3 minute candles? Because we see that this candle body here is clearly above this candle body. So, and there's also a gap. So it's beginning of wave one, and to understand where wave one terminates, you have to have candle body under candle body. So none of these are candle body under candle body. There's not a single candle body here that is underneath this candle body or this candle body. So price keeps consolidating, price keeps going up, and then right here at this doji, the next candle is candle body under candle body. Very difficult to see on high price stock. However, my script, this orange wedge, tells me that there's a gap in price. So this doji actually opened at 514.48 and closed at 514.48, so it's a perfect doji. The next candle here opened at 514.46, so there's a 2 cent gap. Like I said, very hard to see. That's why I have a script that captures those. So that is the pullback. That's the beginning. As soon as you have candle body under candle body, price is no longer going up. It's the end of the wave. Does it mean price can go lower? Does it mean price has to reverse? No, it doesn't. Price can continue to go down, but in this case, this is candle body under candle body. Price starts going up. So this is the beginning of wave two. This is the end of wave two. It's in red because price goes no higher and starts coming back down. So this is the beginning of the 5 wave move up here, which is indicated by this W1 in kind of like this cream color, yellow color, gold, whatever you might see on your screen. So we started at the highest bodied candle and the smallest bodied candle. And then we're looking for price to go down. So here we have this kind of like small looking doji. This is actually candle body under candle body. So this tells us now that price is actually going down, and price continues to go down. It bottoms out, and then here, how do we know that price is no longer going down? Well, because 2 minutes later you have this candle body over this candle body. So this terminates the wave one going down, and then price pulls back. We get into wave two. How do we know that price is no longer beginning of wave two? How do we know that price is no longer going up? Because here we have candle body under this highest, smallest candle body here. So that's the beginning of wave two. Price needs to break wave one. So here it's starting to break wave one with the close. I don't care about tails and wicks unless you're on the 5th wave. So here price actually does close below this wave one. Price needs, now we need to see complete candle bodies underneath wave one, and we get that. Here's a complete candle body under wave one, this one followed by these. How do we know that price is no longer going up and that this is the bottom of wave two? Because right here, this candle body over the smallest body, smallest lowest candle body here. And then price goes up, 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 up. We get wave three. And then right here, this candle body, or excuse me, this candle body is under this candle body. So we would expect the price to keep trending back down. However, price doesn't, and it goes down over here, pulls back up. Now we get this candle body here, not the green one, but the gray one. This candle body is above this candle body here. So this is a wave three failure. So it's breaking above this previous wave. So that's not good. Price pulls back. Here we think, okay, yep, finally price is going to break down because we're getting candle body under this candle body. Nope, this goes candle body over and price continues to go up. Once again, breaking the second wave three attempt to be the high, and then price goes up here. You finally get candle body under candle body, and then price starts coming down. So we know that this is the top of wave 3 because we get candle body under candle body, and this particular wave has to break and print candles beneath wave 2. So it takes several minutes, and then here we finally get a candle print, a close, but we need to see candle bodies under. So this candle body and this candle body are both underneath wave 2. This is the end of wave 3 because price goes up right here. That's candle body over candle body. So price goes up, and then here on this particular candle, then we get candle body under candle body. We know now price is going back down, so we need to see price breaking wave 3. Price does break wave 3. We need to see candle bodies completely under wave 3. Here we get the candle body under wave 3. 2 minutes later, we get this candle body here. This larger one is above this candle body, so that is the end of wave 4 and hopefully the beginning of wave 5. I'm going to scroll to the right, and you can see that wave 5 makes multiple attempts. Starts, doesn't come down and make a new candle body underneath, a print underneath. Actually, it does make a print, but it doesn't get a candle body close. And then price goes back up, and it fails, starts to come back down, fails, goes back up, comes back down, goes back up, fails, comes all the way back up here, and then finally prints candle body under candle body, and then you can see this takes quite some time to finally print. What we're looking for is this break of wave 4, and we have to have candle bodies under this. So here we get the candle bodies underneath right here. This is the end of wave 5. So that is the 5-wave move. So then let's go back, and so there's the 5 waves. Let's talk about entries and stops. So let's say that you were looking for long on a Microsoft, and you waited to this consolidation, and here you get candle body over this candle body. So let's say you got in at the close here of this candle, or you saw it breaking this, whatever you were trading, doesn't really matter to me. So you're in. Your stop would have to be all the way down here. Price goes up, makes this wave 1, you get the pullback, you should be taking the profits, and then price goes up, and then it ultimately fails. So when price made this wave 2, your stop would now have to be, whether you put it at the bottom of the body or at the bottom of the tail, this is where your new stop would be, because you've just made a new wave. You've got to move your stop up. Now let's say that you were bearish on Microsoft. So here's the beginning of your wave 1. Here's the end of wave 1 and the pullback. So if you're aggressive and you see price start coming down here, you're getting this candle body under this candle body, and definitely this one under. Then you go short, let's just say here, or even if you're shorting at the break of wave 1 down in here, your stop has to be at the top of the wave 2. So I would use the highest candle body or the highest wick. So somewhere in here or here, that's where your stop would be. And then you're just looking for price to continue to make its multi-wave move down. So that's how you would trade it. Now, if you got short when price starts rolling over on wave 2 or breaks this, once again, your stop is up here, right at the top of this body or the top of this wick. Price goes essentially sideways and creeps up for, what is that, almost half an hour, but you'd never been stopped out. See, even if you had your stop right here at the top of that candle body or at the wick, you never got stopped out looking right. You never got stopped out. Came close, but you never got stopped out. So let's say that you wanted to get short. So this is the wave 2, and then you see candle body going underneath this candle body, and you have a gap there. You think, okay, now I'm going to go short. Okay, you've gone short. So in this particular case, we would make an assumption that this is the beginning of wave 3. Price comes and price needs to start coming down. So if this is where I got in, or if I got in here, then my stop would have to be at the high here, and I would have gotten stopped out. And same thing, price comes back up. If you got short again on this candle or breaking below here, then you would have gotten stopped out as price came back up. And maybe you gave it a third and final attempt if you haven't given up, and maybe you got short here, or you're just patiently waiting for price to break either wave 2 or this lower wave 3 or this lower wave 3 that failed. So if you got in, then what I'm saying is if you re-entered your short based upon price now once again breaking this low or this low or this low, your stop has to be up here at the wave 3 candle body high or at the wick high. And you're looking for, once again, price to just make new successive waves lower. And that's exactly what it does. So if you, let's say that you got in short here, then your stop is still all the way back up here. And then price rolls over, makes a wave 4. What I would do at that point is I would move my stop to here, waiting for that 5th wave to eventually happen. And let's see, so if I got in short here on wave 3 and I'm gonna put my stop right in this area, well, you can see about an hour later I would have been stopped out. So how do you know when you can take the short? I would say that this would have been extremely demoralizing. I would have given up. I don't know if anybody else would have hung in there that long, but if you decided to take a short in here or here, then your stop would have to be the top of this wave 5 beginning. And ultimately, you don't want to see this when you're trading, because wave 5 breached the high of wave 4. So that's never good. And then ultimately, price does come all the way down, and as you know, makes new lows here, new candle bodies under this candle body. So that's the end of wave 5. I am going to zoom out a little bit, and we'll zoom back in. So let's talk about 4 candle connections and poor structure. Some people call this a fair value gap. So here, what you can see with all of these wicks coming up, there are no bodies in this section, absolutely none. And then we finally get a body here. So ultimately, you need to be able to make a 4 candle connection. So if this is, we'll just mark these out. If this is, we'll just draw a rectangle. If this is candle body 1, we'll find the highest one right here. Then I need to be able to connect 4 candle bodies through there. And you can see that right here, this candle body gets a 4 candle body connection here, 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 and here. And then, of course, if you extend this to the right, you get multiple other connections. So that's poor structure or fair value gap that got retraced. Be careful with these, because price doesn't always have to retrace through the entire poor structure or fair value gap. A lot of times you'll see price just come down. It'll come down within a penny or two, depending on the stock price that you're trading, and then it will reverse out of that zone. So just be cognizant of that. Gaps and poor structure don't always have to be 100% filled. So here's another gap right here. There's a gap between these 2 candles. It's very difficult to see this, but I know from my wedge that there's a gap. And you can see that this gap line, this gap between these 2 bodies, ultimately got filled up here. and you have at least a 4-body connection through this area as well. There's also a gap down here, and I'm not sure if that's been filled yet. Let's put a line on that, because I can't remember where wave 5. Yeah, so basically that gap got filled after wave 5 hit. And if you're going to use pre-market data, you can see that there's some poor structure in here as well. So that's around this 510 area to, let's just say, right here. So let's 510 to 550. Let's see if price has filled that. It dipped down into that section, but hasn't filled it yet. And you can see that here. So it dipped down in there, but it hasn't filled that yet. And notice how it bounced out of that, leaving that fair value gap and that poor structure and no 4 candle bodies connected yet. I gotta switch tickers real quick to bring my chart focus back. Okay, let's get back to this. And so the next one is 5 waves don't have to be the largest move right here. This is a very important point. So you can see that Microsoft from the open here went from, what's it called, 510.25 all the way up to about 514, I don't know, 90. That's a $4 move. Microsoft, I don't know what its average daily trading range is. I'd suspect it's around $4 or $5. So you can see just in this first 25 minutes of market open, Microsoft may have hit most of its average daily trading range anyway. And so at that point, unless there's a catalyst like a news event, something positive or negative, I wouldn't expect Microsoft to trade out, or any stock to trade outside of its average daily trading range. And so what does this lead credence to? This leads credence to that, okay, that the big move for the day happened, and that most likely we'll get a pullback to fill these areas of poor structure, you know, here, 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 and maybe down into here. And so this gives credence to the fact that we might get a 5-wave down move. And that's exactly what's happened so far in Microsoft today. And yes, you can get more than a 5-wave move, as in here. This was most likely a 6th-wave move, and that can happen. It's just my observation that the 5-wave move is more consistent, and you should see this you should see 5-wave moves daily, 19 out of 20 trading days. So if you like trading Microsoft or Apple or Nvidia or Google, then you should just confirm that they have 5-wave moves 19 out of 20 days consistently. Does that mean that you can't trade those? No, it doesn't, but I'm more of the type of person that likes to see the waves and price movement, and so it builds confidence in my desire to trade something if I see consistent 5-wave moves. You don't have to nail the top, right? And you don't have to nail bottom. If you were able to catch, really 3 of these waves or just one of these larger waves, but if you're trading large enough share size, or if you're trading options, that's enough movement to make a decent profit for the day. Thanks for watching. Have a great day.